This is Tom Lee, editor-in-chief of NEJM Catalyst, and we're talking today with Daniel Stein, CEO of Embold Health, about where employer-based health insurance is going. A small topic, I know, but I think Daniel's perspectives are going to be valuable. I've known him since he was training in medicine at Brigham Women's Hospital and getting his MBA at Harvard Business School. He then went to Walmart, where he helped start their primary care clinics before starting Embold Health 7 years ago. We're really focusing today on the broader picture of how employers are responding to pressures related to healthcare. And Daniel's perspectives are valuable because employers are the main customers of Embold. So he is really paying attention to their thoughts and needs. But let's start with a very quick intro of Embold Health for our listeners. Daniel, what does Embold do and who does it do it for?
Well, thanks a lot for having me here today, Tom. So Embold Health is a data analytics company. So we evaluate how individual physicians practice, not based on online reviews or word of mouth type of stuff, but based on their actual outcomes. And then we make that data available to self-insured employers as our primary customer through a series of tools that help their members when they have a care need, figure out who they can go see, who they can trust that's going to deliver high quality care.
Okay, well, we're going to come back in a little bit and discuss how that work is going. But let's first step way back and ask for your very high level comments on how is employer-based health insurance going? They didn't all run for the door when the Affordable Care Act was passed, but my guess is they must be feeling incredibly pressured. How would you summarize their current perspectives?
Yeah, it's interesting, Tom. In the larger healthcare policy discussions, Medicare and Medicaid and other government programs get a lot of attention. But as you noted, the reality is most working Americans get their coverage through their employer. So all in, about 165 million Americans are getting coverage through their employer. And it's a tough job to provide health coverage for your employees. Not only do you have to worry about things like cost and quality, the usual types of pressures that a purchaser has, but just coming through this global pandemic, employers were focused for a long time on how do you make sure that we're caring for our workforce, and making sure they've got access to care during that time when they and so many of us were under pressure. So it's a really interesting space, and it's a space that's an important one. I think the main thing that employers coming out of COVID are now grappling with is the challenge of rising medical costs. So while the public sector programs have been more flat, over the last 10 years, employer-sponsored costs have been up about 40%. And coming out of COVID, we're seeing an acceleration in trend projections. So many of the employer consultancies that advise employers on their benefit programs are predicting high single digits, maybe even double digit trend increases, as we see kind of the price increases and some of the utilization returns coming out of COVID. So for employers right now, they still have a really important mandate of how do we provide coverage for our people? How do we make sure it's high quality? But now they're also under a lot of pressure. How do we do this in a way that's affordable?
Well, those cost pressures, they're just going to get worse, aren't they?
They really are, Tom. And I think it's important, when thinking about the employer-sponsored space, to think about the cost pressure really through two different perspectives. So one is the employer, the HR, the benefits, the finance leadership team that's trying to provide coverage for your people, but doing it at an affordable cost structure. And then the second perspective that is also really important to bear in mind, and certainly something that employers spend a lot of time thinking about, is how do we do this in a way that's also affordable for our employees and their family members? Over the last 5, 10, 15 years, you've seen deductibles increasing. So the average deductible now in the employer-sponsored world for a family is over $4,500. So we're pushing a $5,000 deductible. And the reality that we know is that a lot of Americans struggle with being able to afford that type of deductible. So the latest stat I saw is that they're 28% of Americans that have under $1,000 in savings. So if you think about those two things, that's creating a lot of financial pressure, not just for the employer who's responsible for providing this coverage for the people, but also for the employee and their family members themselves who have to afford and pay for that care too.
Well, given these pressures where, the people providing care feel like their expenses are going up and employees can't bear more expense, what are the major options available to the employers?
Yeah, it's really interesting, Tom. So historically, employers have purchased plans from their carriers, from their health plans that tend to be big, broad PPO networks. So you can think of these as networks that have virtually all the providers, high 90% of providers in the network. And so kind of the way that the carriers have competed with each other typically has been who can extract the biggest discount out of the providers, in terms of their network rates. But what we're seeing is there's just not that much additional savings to be had with that traditional dynamic. And so instead, what employers are increasingly focused on is, well, what can we do differently within the networks that we already have? And that's where the type of solutions that we do around digital storage and network optimization really come to bear. Because as you know, as a doctor, and as I know, from my own clinical experience, there's a huge amount of variation in how different doctors care for similar patients. And we see that variation in the context of a lot of unnecessary and inappropriate care. So just to give you, a couple of examples here, Tom, if you look at a woman who is having a healthy pregnancy, so under 35, no comorbidities, don't have preeclampsia or gestational diabetes, their likelihood of having a C-section varies almost fourfold depending on which obstetrician delivers that baby. Or if you take a population, another big cost driver in the employer world, musculoskeletal. If you take a member that has new degenerative joint disease, new onset osteoarthritis, a population where we know knee scopes, arthroscopies don't benefit. If you look in the commercial claims data, that member's likelihood of having that unnecessary knee surgery varies 10x, depending on what orthopedic surgeon they're seeing in the network. And so one of the real big opportunities that employers are finding is how can we optimize the decisions that our members are making regarding what providers to see for their specific care needs within the networks that we have.
Well, can employers actually steer volume successfully to the physicians you identify as both high quality and efficient? Or do narrow networks make their employees too upset?
Yeah, so Tom, so you can think about this kind of as two separate questions. The first is, can you provide guidance to your members to help get your members to those highest performing providers? And then the second is, how do you do that? And does that how include some type of network components? So let me just separate them. So the first thing is to be able to do this, you need to first understand how the providers in the network are actually performing. And so that's kind of the first thing that we do, which is developing those really detailed, clinically validated analytics to understand how the providers are performing. Then the second part of this, which gets to your question, which is, okay, we have this information, but if we make it available to our members, can we actually influence their decisions? And what we found, probably not at all surprising to you, is, the average person doesn't know what to do with a risk adjusted, propensity adjusted, complication rate after spine surgery. That's not something that the average person can understand or do anything with. But if you take that information and make it actionable through a recommendation engine that says, when I need to go see a back doctor, who's high quality, in my network, who's high quality in the local market where I'm living or working, that matches my preferences around gender, languages spoken, and factors like that. What we found is members absolutely will use that information. They want that information, and they actually make different types of decisions, um, in terms of which providers they pick. So on that first part, I think the evidence that our employers and our employer clients have seen is an unequivocal yes. If you make that information actionable and you make it available to the member when they have a care need, they'll pick higher performing providers. The network part of it, kind of the other half of this equation, is an interesting question, Tom. What we find is some employers want to layer on financial incentives, which you can think of as, an optimized network type of solution. And some employers don't. And a lot of that is kind of a cultural, how do they think about their employees? How do they think about their benefits program? Um, but for the employees that have gone down that route to include financial incentives, usually they're doing this through lower copays and lower deductibles for the higher performing providers. So it's not something that the members get upset about. In fact, in many ways, it's perceived as an extra benefit. If I go use these higher performing providers, I have a more generous benefit offering associated with it.
Well, the world is changing, and I'm sure what's true today in terms of receptiveness is going to be history in a few years. I've seen data showing that patients increasingly are not relying upon doctors to tell them who they should go see next. And they're looking at other information. And my guess is that some of the kind of information that you're providing will be received more and more eagerly as time goes forward. But now, if we were to, pretend that you're back at business school and this was a class, and the professor asked, "How does Embold create value?" What would be your answer today?
Yeah, so I think that just to go back to your first question, because in many ways it's an extension, it's an answer to this question too, Tom. The reality is right now, consumers want this information. They want to be able to have objective insights into how the providers are performing when they have this care decision. They don't want to just rely on their doctor's recommendation. But the reality is the information that they have at their fingertips traditionally has been stuff like online reviews and word of mouth and, much more subjective type of insights. So there's definitely a growing appetite in the market for this type of objective information. And that's really, Tom, how we produce value. We know that higher performing providers on average cost around $2,500 less per year. Every other industry, we've seen this to be true. Higher quality on average leads to lower total costs of care. And healthcare is no exception there. And so the way that we create value is by understanding how the providers perform and then making that information available to people when they have a care decision so that they can make a better decision. And we're able to measure both the direct clinical impact of those decisions. So how much better care they're getting in terms of the quality outcomes, as well as the financial impact, the savings that they and their employer are able to realize from it. So it really is one of those win-wins where people getting better care are also driving lower total cost of care as well.
And to wrap up, if this were a business school class, the professor might end by asking you, and how is Embold going to create value in the future? What's coming? What's next?
Yeah, so two things I'm really excited about, Tom. So the first is the opportunity to bring employers, purchasers, and providers together. Historically, one of the things that's held back value-based care in the employer-sponsored world is that employers and purchasers and providers don't really sit in the same room and don't really have a direct conversation with each other. It's happening more through intermediaries. And what we're seeing is there's a growing appetite on the behalf of employers to be an active participant in these conversations with their health plans and with the providers using objective data. So we'll have a conversation where the employer, the health system, and the plan are all there. We're all looking at the same data. We're all looking at the same type of variation. We're all looking at the same type of quality and cost improvement opportunities. And what we're seeing, Tom, is it leads to a total different conversation as opposed to just pointing fingers at each other. What it leads to is the opportunity to roll up our sleeves together and say, okay, we see the opportunity here. How can we work on this together through a series of shared goals? So I'm really excited about that opportunity. And I think that's going to continue to grow over the coming years as more and more employers become more active in their benefits. The second area, going in a total different direction that I'm excited about over the coming years, is the ability to integrate our analytics into some of these AI-powered solutions. We found that many times members don't actually know what they're looking for when they're looking for a care need. My knee hurts. I don't know if that means I need to take Advil, if I need to go see an orthopedic surgeon, if I can go see a doctor like you in primary care, or if I need to go to urgent care, the emergency room. Do I need an x-ray? Do I need to see a physical therapist? And so what we're seeing is there's an opportunity to integrate these objective analytics and provider recommendations into a more conversational interface, like some of the AI-powered large language models, to be able to help guide members through that care journey. And this is one of those opportunities where if everyone wins. It's better for the member who is able to get to the right place the first time. And by guiding people to the most appropriate setting of care and the most appropriate provider, it also drives meaningful quality and cost savings.
Well, Dan, as someone who I know is comfortable with the data, comfortable with the market, and comfortable with the tech, I know you're going to be right in the mix as we try to work with all three of these to figure out how to make care better. Thanks so much for your perspective on what employers are thinking and doing and how Embold and others are trying to help. I'm sure that we're going to be hearing more from you in the years ahead.
Well, thanks, Thomas. It's your pleasure, and it's an exciting time to be in this space.